18 months ago, this stock was the darling of every portfolio in Europe. Today it's down 45% from its original highs. Wall Street has given up, the headlines are brutal, and most retail investors won't touch it, which is exactly why I'm covering it. Because if you ask the right question, not the question the financial news is asking, then Novo Nordisk might be one of the most interesting setups in the entire market right now. Let me show you what I mean. And if you're interested in long-term investing, subscribe to my channel. I post at least 5 videos per week on these subjects. Novo Nordisk. First, if you don't know what this company does, let me give you a quick overview. It is a Danish drug company that invented Ozempic and Wegovy. You've probably heard of those, everyone has. And if you haven't, let me explain. Ozempic is the diabetes drug that turned out to also make people lose massive amounts of weight. Wegovy is essentially the same drug, but marketed specifically for weight loss. And these two drugs have been one of the biggest medical stories of the last decade. Half of Hollywood is on them. Your auntie's probably on them. The waiting lists were so long that knockoff versions were being sold outside of strip malls. So this is not some small random cap company. This is one of the most successful drug stories in modern history. And here is where the trade gets interesting. In June 2024, Novo Nordisk hit an all-time high of around $144 per share. The whole world was buying it. It was the most valuable company in the whole of Europe. Today it's trading at roughly $45 per share. That's a 68% drop from its peak and 45% drop from a year ago. $200 billion of market value gone. So what happened? 3 things. 1. A competitor showed up. A US company called Eli Lilly came out with their own weight loss drugs and started taking market share hard. Lilly drugs are now growing 80 to 125% a year while Novo's growth started to slow. 2. The Trump administration sat Novo down in late 2025 and said, cut your prices or we tariff your imports. Novo agreed, so starting in January 2027, they're cutting the US list price of Wegovy by roughly 50% and Ozempic by about 35%. 3. In February 2026, the company itself came out and said that sales would decline by 5 to 13% this year. That was the moment that Wall Street threw the towel in. The stock cratered. Analysts downgraded it. Headlines became apocalyptic. And this is where the opportunity might be. Because here's what's actually happening inside the heads of people who own the stock. There's this thing in psychology called loss aversion. It's one of the most studied effects of all human behavior. The pain of losing $100 is roughly twice as strong as the pleasure of making $100. Which means if you bought Novo at $80 a share and watched it go to $45, you're probably in some pain. And your brain is doing one of 2 things to make that pain stop. You refuse to sell, because selling makes the loss real. You tell yourself it will come back. You don't look at the chart, you don't add more, you just freeze. Or 2, you eventually break and you sell at the bottom and swear off that stock forever. Never again. Neither of those are analysis, they're both kind of pain management. And then there's a second force, the narrative collapse. When a stock story breaks publicly, and Novo's story is broken as publicly as it can get, the market doesn't gently reprice it. The market overreacts, sellers panic, buyers disappear, and the price overshoots what the business is worth, often by a lot. And that's been Warren Buffett's career probably in a few sentences. Find businesses whose stories have broken, temporarily, but the fundamentals haven't. So that's a setup. Loss aversion has frozen the holders. Narrative collapse has chased away the buyers. The price is the gap in between those 2 forces. And the question is the business underneath it still good? Let's take a look, because these are the numbers that matter. Number 1, price to earnings ratio. A quick reminder is that the price to earnings ratio tells you how many years of the company's current profits you'd have to add up to equal what you're paying for the stock. A price to earnings ratio of 10 means it would take 10 years of profits to pay back your purchase price. Lower is cheaper, higher is more expensive. Novo Nordisk right now is around 10. Now here's the part that really matters. Over the last 10 years or so, Novo's price to earnings ratio has been around 26. So the market has historically priced that company's earnings 26 times, and today it's priced at 10. So that's about 60% cheaper than its normal average valuation. Number 2, return on equity. This tells you how good the business actually is. For every dollar of shareholder money inside of the company, how much profit it generates each year. A good business runs at 15 to 20%. An excellent business runs at 25 to 30%. For Novo Nordisk, it's 71%. That's not a normal number. That's a phenomenal business. It's the kind of business that compounds for decades if you allow it to. Number 3, the buyback. The company just announced a 15 billion Danish kroner buyback. That's roughly $2 billion US. When a company buys back its own shares, It's saying, we think our stock is so cheap, the best use of our cash is to buy it ourselves. So management is voting with their own wallets. Now let's look at the bull and the bear case. The bull case, and that's the one I lean towards, is that this business is still extraordinary. 71% return on equity, best-in-class margins, a new oral version of Wegovy, just launched in January 2026 and is being called one of the best drug launches ever. Q1 earnings this year actually beat expectations, and the company raised its guidance for this year. And they have many more revolutionary drugs in the pipeline. The valuation is at multiple year lows. The market is priced in disaster, and that disaster doesn't appear to be happening. Now for the bear case. Their competitor, Eli Lilly, is genuinely winning the market share right now. Price cuts in 2027 will compress the margins. Patent expirations on some of their drugs will cause disruption. And when it becomes commoditized, meaning everyone else makes those drugs, prices race to zero and the magic starts to disappear. Those aren't made up risks, they're real things to consider. And I know what some of you might be thinking, how about I just invest in their competitor, Eli Lilly? And that's a good question because they're crushing it on every metric right now. They have some of the best selling drugs in the entire world, and their revenue is growing 56% per year. If you measure best business right now, they clearly win. But here's where it gets interesting. Lilly trades at about $1,065 per share. It's a $1 trillion company with a price to earnings ratio of 38. Novo trades at 45 with a price to earnings ratio of 10. So you're being asked to choose between two things. Option 1, buy the winner Lilly at 4 times the multiple. Option B, buy the former wounded leader Novo at less than a third of Lilly's multiple. And this is an important choice to make in your investing analysis. Do you pay for the company that's winning today? Or do you pay a discount for a company that the market thinks is losing? Both can work, they're just different bets. If you buy Lilly at 30 times earnings, you're betting that they'll keep growing at 50% a year. That's a growth rate that has to be phenomenally well executed. Everything, all their new drug launches have to be super successful. Because anything less than that, and that 38 multiple compresses and the stock falls hard, then you might lose out. But if you buy Novo on 10 times earnings, you're betting on something much simpler. You're betting the market is overshot on the downside, that the business is still great, that even if Lilly keeps winning, there's still enough space in that huge market. But here's the honest summary. Lilly is probably the better business, but Novo is the better trade. And now the question that actually matters. If you buy Novo Nordisk today at $45 and hold it for the next 3 to 5 years, what's going to happen? There's 3 scenarios: bear, base, and bull. The bear scenario first, because if you can't stomach this, you shouldn't be in the trade. That case is that Lilly keeps winning. The pipeline disappoints. Price cuts squeeze margins harder than expected. Earnings drop by another 20%, and the stock could drift down to the mid-30s, maybe into the 20s. That's a 30 to 40% drop from here. Real money, real pain, and if you can't sit through that without panic selling, you're in the wrong trade. The base case. Novo holds roughly where it is. Lilly wins some, Novo wins some, and the overall market still keeps growing. The valuation slowly re-rates. Price to earnings ratio goes from 10 to maybe 15 or 16. Earnings hold steady or grow modestly. And in this scenario, you're looking at the stock getting up to 65 to 75 in the next few years. That's a 45 to 65% upside. A good return, nothing crazy, but decent return. Now for the bull case. Their pipeline delivers. Their new drugs are genuinely better than their competitors. Oral Wegovy keeps crushing it. Their GLP category for cancer prevention, which is still in early trials, becomes real. International growth, especially in China, accelerates. In this scenario, earnings up to 30 to 50% over 3 years. The price to earnings ratio re-rates back to its historical 26, and the stock could revisit $100 or higher. That's roughly double from today's price. So if you buy at $45 today and hold in 3 years, you're looking at bear case minus 30 to 40%, base case plus 45 to 65%, bull case 100% plus. So in plain English, you're risking minus 30 to 40% to make 50 to 100%. That's an asymmetric bet. It's not a guaranteed bet, but it's a mathematically favorable one, if you believe this business is still great. And in my buckets of investing, I would put it as a deep value bet, because it's a company that's got a proven good business behind it that's temporarily beat down and is a great price to buy it at right now. And that's what great investing can be about, buying when everyone else is panicking and being disciplined and looking at fair value. If you enjoyed this video and want to learn more about long-term investing, subscribe to my channel. I post at least 5 per week on these subjects. Thanks for watching.